Let's talk what happened today in the stock market. Today is a classic short squeeze reversal, so to speak, which is the theme of the stock market in recent time frame. Right, it's this V recovery. You got a V here, and then an outbreak, short squeeze. The short squeeze occurred right when it broke above this level, which is a even number, and you can see this line. Obviously, I completely missed it and lost money because all through this whole event I went short. Well, when it ends, pretty much high of day, and that's what happened during a short squeeze. Specifically when it's a option expiration Friday, the short squeeze normally go all the way up. Even at the end, I was expecting some sort of reversal because this just didn't make sense. Why did they have a short squeeze today? We can talk about that a little bit later on, but technically, when it broke out here and kind of fell back here, I should have cut my loss and call it a day. Obviously, I just didn't think that. I mean, I just thought it was just gonna play around this and eventually go down. No way would I thought the day would end here. So it's a tough lesson to learn, but something I need to document. Otherwise, I'm gonna forget like always. And you can see the whole theme of the V, right? I was talking about the V occurred the whole time this whole week was V recovery, right? V recovery. And also, if you look at the bigger time frame, this is a V recovery, right? A V recovery. Um, this huge thing is a V, with smaller V in between, and flat downturn yesterday, which I mentioned yesterday was because of the bond attack on the bond, attack on the TLT. The interest rates were going up. I think this was what happened yesterday. The interest, or maybe it was this event. I don't remember. But anyhow, yeah, either this one or this one was what happened. The bonds were hit yesterday, um, and that triggered this whole thing. So if you were short, you pretty much miss all of this, because it occurred like before Jerome Powell spoke, so it was like kind of confusing. And then if you were short today, with the sentiment of being short like I am, obviously all through the whole day you're gonna short and you're gonna lose. So you miss out on the short opportunity and you lose on the squeeze. So it's a kind of like a double whammy. It is what it is. That's what happened when you fail your discipline and you become, I guess, sort of too confident, too complacent, and just lack of lack of understanding of the technicality of potential, right? Or like I said, I go with probability, I go with statistics, and I was saying how when you have big down red day, right? Big down red day, and typically when it's red, it's gonna be a big red candle. Well, there are times where you have big down red day and you get some kind of a reversal right here. I mean, it does happen. So you can't just say statistically just because yesterday was a big red day that it's going to follow up with another big day red day, because in recent events this is what you see. That is a fatal mistake, a common mistake. I call it a brain seed, right? Because you see this and you go, oh, look, big red day is normally accompanied by other big red day. But then you fail to see, going benchmarking all the way to the past. There are times when you do have doing a upturn, big red, and I guess, I mean, I'm not gonna go find it, but there has to be one somewhere where it's sort of a like here. Yeah, this may be the first of its kind. Unfortunately, let me see where this is a up. Let me look at some of the upturn, and yeah, it looks to be the first of its kind, where there's a upturn, a reversal, and then but that's the whole theme this week was that V recovery I was talking about. And yesterday I also mentioned that this was kind of a weird manipulation event. Yeah, this was all just, I guess, an attack on the bonds, the TLT. I mentioned that yesterday right here on the attack on the TLT, right? Boom, went down. And that was kind of weird, I thought. Um, and then Jerome Powell spoke and he was negative on the stock market. So obviously my sentiment is going to be bearish. So I was happy it gapped up, right? And I made money along the way down. But obviously during the way up, I was expecting to make more money. And here she writes, right? So why did this happen? This is a classic squeeze, right? But why did they squeeze it? Well, one, it's option expiration Friday. But two, the reason why it happened fundamentally, or the catalyst for it, is because of this consumer sentiment being um, a lot lower than expectation, right? The forecast was 15, these are the forecast number, the previous number, and we were expecting the numbers to be lower than expected, so lower than forecast, but we didn't expect it to be this low. So this is a problem right here. Now, the inflation is higher, so both of these typically would lead to a lower day close had this number come in relatively flat, I mean, relatively slightly lower than forecast. Meaning it's when it's this low, you know, it triggers a reversal, so to speak, because it's a misnomer. People think, well, look, um, worst number is gonna cause more of a downturn in the stock market. But if you interpret the data correctly, I mean, when it's too bad, it gonna means that the economy is slowing down, and that is what the Feds want. What the shorts want is lower consumer sentiment, higher inflation without the economy slowing down. So this number kind of, it was it was much lower than expected, way too low, right? um so fundamentally this pretty much tells you a recession is inevitable, right? With this type of condition that we're in, where the consumer sentiment is really low, and the inflation is stubborn or sticky. So you got a recession coming. That's pretty much given. Given the fact that you also have, you had layoffs today. Let me see where I can find it. It was in the Google. Let me see. Well, I'll have to type in layoffs, but yeah. Let me see if I can find it real quick. Layoffs. So yeah, you got more tech announced at Google, Amazon, and Snap. Let's just take a quick look at this video.
New at 10 tonight, some major tech companies have.
Oh, this stinking. Now it has to do the
Do you know what's in your
advertisement.
cheap protein powder? Well, here to tell us is all natural fitness athlete Paul Sklar.
Anyway,
all right, let's see what we got.
yeah, this
Sucralose,
thing is
artificial
all
flavors,
messed up.
soy lecithin.
But anyhow, I need to fix that. But yeah. So you got layoffs announced at Google, Amazon, and Snap. The condition is going to be continue. It's going to probably be the theme, as we are in Q4. So End of the year, companies are going to start to trim their headcounts, knowing the forecast for next year is going to be weaker than expectation. So next earnings are going to be, I would say, Q4 earnings. Um, we just had Q3 earnings, so Q4 earnings, I forget exactly when that will be. I think, let's say, Google is normally one of the early ones. So it should be, let me see what the crosshair. So it'll be in January. So January would be Q4 earnings, which is gonna be weak, and the forecast is gonna be weak. So yeah, that's probably when things are gonna be pretty bad as far as earnings are concerned. And so earnings are gonna start playing a role on next earnings, because with the way the consumer sentiment numbers are coming in, this pretty much tells you there's going to be a slowdown in earnings. But as far as today, right, short time frame today, well, what do you know? You get a squeeze because people are forward looking. They're forward looking when they want the data to be in their favor. So for some reason, they just engineer a good squeeze. There wasn't any signature, trust me. I looked for it. There wasn't any signature. In fact, when the numbers came out, it was everything was going down, right? Everything was going down, and the people were, they were buying a lot of puts. So you were seeing puts being bought throughout that whole period. Throughout the whole period, they were being bought up. So that was also giving me a false signal, because I was seeing these puts being bought. And let me look at the trade to see. Yeah, there's a lot of puts. So I was confused. I was like, what's going on? Well, yeah, these puts, I mean, there wasn't that many call puts being bought. Um, I mean, there's always going to be some call puts, but these call puts are not big. It's hard to interpret sometimes, to be honest. I misread it, frankly. A lot of time I misread because I'm only looking at the puts. When the puts come in a lot, I'm expecting it to be. Now these are some massive movement, right? We're talking about like all the way from 0.04. Like, had you bought some of these puts, or some of these call options? Let's say this guy right here. I mean, you can get this six. Yeah, that's huge, right? That's some huge movement right there. Absolutely amazing. Um, I mean, I didn't see it. I didn't see it. Honestly, I should have kind of saw it, because I was talking about it yesterday about the V recovery and how weird this was. It just didn't trigger in my head. It just did not trigger in my head. So at this point, it did end pretty much high of day. Um, let's look at this. I think after hours, it might have went down a little bit. So yeah, after hours it closed at no, let's take a look at this guy and see if that no, yeah, I guess it so now it's at 40 440. Yeah, so 440. So it's a little bit down compared to where it closed. So Monday is gonna be kind of a next next week, right here. So Monday is when you're gonna get the forecast for the CPI and the PPI. Actually, the forecast came in already. It came in today. Oh, maybe that was the reason why. Interesting. I did not realize it. So today the forecast for the CPI came out. I missed that, right? I did not look at it. And so the forecast for the CPI came out today. And so that's a positive sentiment. And that's probably the reason why we had a squeeze today, on top of the on top of these consumer expectations and the layoffs. So the numbers came in at expectation with the previous. So this is a positive sentiment, especially the CPI month to month came in at 0.1, right? So that's pretty low. So yeah, this is positive number, and the PPI came out too. So the PPI forecast came out at 0.2, which is less than the previous. So this is going to tell you that this consumer inflation expectation is going to be higher than expected. So Monday most likely will be a down day on fear of the CPI. And there's always a chance the CPI might miss, right? There's always a chance these CPIs are higher than expected. So that might be a negative on Tuesday as well. Again, the bulls has been strong in recent month or recent time frame, right? If you look at this month, it's above the 5 month moving average now. I was expecting this to hold this week, but when it was down here, I was expecting it to hold below the 5 month moving average. But now it is above, and it's above this trend line, so to speak. So I might have to fix this trend line. Let me see. I can't fix it, but I can redraw it to make it more appropriate. And well, it's good where it is right now. And so could be a reversal, but I guess you gotta maintain a bullish sentiment. However, any red day would trigger another. That right now, honestly, I think the technical is sort of broken, right? It's sort of like in the air as far as it can be up or down. It's really hard to determine exactly what's going to happen. So any analysis potentially can be incorrect. So you're gonna have to use the intraday analysis, right? Like these guys, you gotta use intraday and pretty much go with straight line analysis, end of day high or end of day low, meaning just expect straight line analysis. Now Monday may not be that because obviously once you have one like this, it's not going to continue the next day without a catalyst, knowing that the consumer 1 year consumer inflation is going to be higher than you know the previous, and there's nothing here that is going to trigger a catalyst. This number has already been released. There's always a potential that they continue to squeeze, but I don't think not on a Monday, right? It's most prevalent on a Friday like today, where there's a lot of shorts involved, and there's a lot of options playing on the zero DTE or zero data expiration. So you see a lot of these calls came in. I don't know if it's really the options that triggered it or just the organically it's just a short squeeze, right? Like it's just the algorithm and everything, right? And it could just be because of these numbers that come in the forecast that I fail to miss because normally I think these number comes in on Wednesday and Thursday, and so the forecast would come in on Monday. But since it comes on Tuesday, the forecast came in today, Friday, and it came in, I guess it came in along with these numbers, right? Or a little bit after these numbers. So these numbers trigger a downturn, and then the forecast number right here triggered a reversal and a short squeeze. So yeah, man, nothing I could do now. In hindsight, after now that I'm analyzing it, it looks pretty clear why it happened. But that's always the case with hindsight analysis. It's just quite obvious, and then you can say, well, look, these MACD are gonna start to flatten out and go negative potentially, right? Anything is possible at this point. I'm not gonna say that um, I'm bearish or bullish or bearish. It's just too difficult to determine one way or the other. Relatively speaking, obviously, the QQQ is the strongest, right? The VIX is dead. TLT semiconductor is strong. Financial is kind of strong. IWM is still weak. And the last one I'm missing is the biotech, which I guess kind of reversed, but overall it's still weak. Individual stocks, Magnificent Sevens, all doing pretty well. Um, I guess I should just throw in Amazon just to show it. Yeah. So the top tech companies are doing well. Anything here? Gold is down. I mean, these are not gonna tell you anything, honestly. Yeah. So the other thing I kind of want to see the value fund, um, Fangs. Fangs are up, of course, and the Vanguard real estates. So with consumer tapped out, the real estates, not real estate, yeah, real estates are gonna be dead in the water. So I'm assuming Home Depot and Lowe's are gonna be pretty bad, right? And actually, Home Depot got earnings coming up, and any earnings beat on Home Depot, this is a good short candidate, honestly. There's nothing Home Depot or Lowe's can do, given that the consumer sentiments are now far below expectation. So the last one I want to look at, um, yeah, it's the zero DTE, and let me just look at the monthly and see if there's anything I potentially might have missed. So above the 5, breaking out, totally breaking out. Let me look at this on the weekly. Yeah, you can see the Nasdaq is so much stronger than S, the S&P 500, and that's really because this has pretty much everything: biotechs, financial, real estate, all the weak components, whereas the Nasdaq just have the magnificent, well, has all the techs, which include the Magnificent Sevens. So that's why they're so strong. Bonds, I mean, I guess this potentially can go back up. There's really no technical analysis at this point to say it's going one way or the other. You're gonna have to look at the intraday to determine where it's gonna go. So Monday, most likely, I am anticipating technical Monday with um, a bias of down, right? Because people are going to be afraid of the CPI. And then Tuesday, you know what? I just gonna have to play it bare bone, meaning have no position, unfortunately, because it could be a miss, it could be a beat. The only other thing I could do is buy a straddle, meaning buy, one lot of puts, one lot of calls, and just expect it to run one way or the other. And that's probably what I will do, honestly. Depending on how expensive it is, it's going to be pretty expensive, unfortunately. So I may not do that. Yeah, I may probably not do that. But because I don't think the upside is that much, even if it beats even if the CPI comes in tame, um, I don't think it's gonna have that much upside until there's some sort of a fear. I mean, it's hard to say. Honestly, any analysis right now is just guessing. Um, yeah, like I said, you have to just play it intraday and just let the intraday um, go, especially on the Tuesday. It's gonna be either high of day or low of day, so you're gonna have to chase. unfortunately, which is the worst strategy, but the most profitable strategy. And on Monday, I'm expecting technical Monday with a bias of down.